Howdy, everybody. Welcome to Liberty Call. Today is Friday, August 4th, 2023. Hope everybody's having a fantastical day out there in the interwebs. Another beautiful sunny day here in Colorado. It looks like some of the rain has finally passed on. And, granted, the ground probably can't take much more from all the water we've had falling from the sky the last few weeks. Anyways, decent day in the markets across the globe. Not so much here locally. It was in the green most of the day, but then sometime in the afternoon, the markets just decided to go back below the flat line and, finished off in the red for today. So, oh, well, is what it is. So anyways, I was worried I was going to be a little bit late. Had to get all gussied up and put on some clean clothes, shave, and got a hot date with the wife today after we finish up our work for the day. We're going to Lowe's to get a new washing machine. I know, exciting. After, 28 years, our old one finally broke. So it is sad. I mean, it's starting to leak and has all these, I've kind of jerry-rigged it to make it work for a little bit longer. But anyways. All right. Well, if it's your first time watching Liberty Call, I'm glad you're here. Thank you very much. Please give me some thumbs up, like, share, subscribes, follows, notifications, hit all those buttons on the screen. And let's go ahead and dive into the numbers for today. Dow Jones finished the day down 0.43%, 150 points, closed at 35,065. S&P 500 was down 0.54%, closed at 44.77. NASDAQ was down 0.36, closed at 13,909. The VIX was up 7.41% today. It's currently up to 1710. Canada was up 0.57%, Brazil down 1.12%, and Mexico up 1.13%. Over in Europe, Germany up 0.37%, UK up 0.47%, France up 0.75%. Netherlands up 0.34%, Italy, Spain up 0.66%, Italy down 0.41%, Switzerland up 0.1%, and Portugal up 0.57%. The Russian exchanges both in the red today. The MOEX down 1.76, the RTSI down 2.95, and the overnights in Japan, the Nikkei was flat, down 0.02, Australia up 0.19, New Zealand up 0.21. In China, the Shanghai was up 0.23, Shenzhen Component up 0.67%, China A50 up 0.35, DJ Shanghai up 0.2, Hang Seng up 0.79, and the Taiwan weighted was down 0.3% for the day. So like I said, most of the globe, pretty decent markets for today, but the local or domestically, not so much. All right, let's take a peek at and see how the markets did for the week. Looks like this is the Dow Jones is going to finish the week off down 1.19%. The S&P 500 is going to finish off down about 2.32%. NASDAQ down about 3.16%. Dow Transports down 2.16%. And the utilities finished the week off down about 5%. So, wow, that one's the worst. All righty. Well, is what it is. Can't really do much about it. But, other than be prepared. That's all I can really tell you folks out there is be prepared and, make sure you got all your, it's just like hurricane season. You got to make sure you have all your, windows boarded up, got plenty of water, dry food and things like that. Make sure the water's not going to get in the house. Same thing with the markets. When things get a little turbulent, know where you need to hide, where to position yourself so that you don't get beat up too badly. If you need some help with that, give me a buzz. My email address is right there, right on the screen. All right. Let's jump into the economic data for the week. Initial jobless claims came in at 227,000, right on forecast. Last week's number was 221. Continuing claims came in at 1.7 million, right on forecast. Previous week's number was 1.679. The ISM Manufacturing Purchasing Managers Index came in at a 46.4. Anything below 50 is considered contraction. Forecast was 46.8, so a little below forecast there. The JOLTs report, the Job Openings and Labor Turnover Survey, shows that there are 9.582 million jobs out there. Forecast was 9.61. Previous number was 9.616. So it looks like it contracted by about 40,000 jobs. The ADP non-farm employment change grew by 324,000. Forecast was 189, and the previous number was 455,000. The ISM non-manufacturing purchasing managers index came in at a 52.7, just slightly under the 53 forecast, and last month's number was a 53.9. The unemployment rate dropped down to 3.5% from 3.6 last month, and the forecast was 3.6, so slightly better than forecast. All right, well, that is everything as far as the economic data. Pretty exciting stuff, I know. Anyways. All right, let me get my notes up here and we'll go through the market recap. SP 500 slips as Apple slump offsets Amazon surge. July job gains miss estimates. All right, the SP 500 experienced a decline led by Apple and witnessed a mixed reaction to the July jobs reports. The report revealed that the economy added 187,000 new jobs in July, falling short of economists' projections of 200,000, despite a slight increase in average hourly earnings and an unexpected decrease in the unemployment rates. Indicated that the job market still remains tight, suggesting the Federal Reserve may need to continue efforts to slow economic growth and inflation. Remember yesterday when I covered an article and they said, oh, no, they're done raising rates. And I said, no, Chairman Powell said he's going to continue to do it. So, I mean, unless he completely changes his mind in the next, 5, 6 weeks, 8 weeks, 7 weeks, I just don't see a difference. I see him going any other way. However, the response from the Treasury yields differed as they dropped amid speculation that the Federal Reserve's recent tightening measures may have reached their zenith. That means the top for you low-educated people. The market is gauging whether the current economic conditions and labor market performance might prompt the Fed to hold off on further interest rate hikes. Apple faced a more than 4% decline in its stock value despite posting better than expected quarterly results. Concerns regarding weaker than anticipated iPhone demand for the ongoing quarter overshadowed the positive performance. UBS highlighted the challenging smartphone market, particularly in developed regions, as a potential ongoing obstacle for Apple stock. It could be because you get soy all over your hands whenever you touch any of their products. I mean, if I wanted to be a blue-haired weirdo, I guess I'd use an iPhone, but I'm not. All right. In contrast, Amazon emerged as a standout performer with its stock rising by 9%. The company reported second quarter results that exceeded expectations with its cloud business, Amazon Web Services, showcasing particularly robust performance. Deutsche Bank emphasized the notable growth in AWS revenue and stable growth trends as key factors contributing to Amazon's positive performance. Tupperware Brands Corporation experienced a significant surge, climbing more than 40%, following an agreement on a debt restructuring deal. I didn't even know Tupperware was still in business. The deal is expected to provide the company with approximately $150 million in relief from cash interest and fees. Tupperware's recent rally, which saw a remarkable 560% increase over the past month, has been propelled by a strong July performance that attracted attention from meme stock traders. Yeah, be careful with those meme stocks. They can kick you in the balls pretty hard. However, Carl Icahn's conglomerate, Icahn Enterprises, encountered a significant setback with its stock falling 24%. This decline followed the company's decision to cut its dividend by half. The move comes in the wake of allegations made by short seller Hindenburg Research, which accused the company of utilizing a Ponzi-like, and that's in quotes, structure to finance its dividend payments. In the midst of these developments, the market is grappling with contrasting signals from different sectors of the economy and pondering the potential implications for future Fed actions. As economic conditions continue to evolve, investors are closely monitoring various indicators to gain insights into the trajectory of the market and the broader economy. Good stuff, folks. Not good news if you're Carl Icahn. That'd be a shame if, he's considered one of the good guys out there in the investment world. And, I don't know the guy personally, but from what I've seen from afar, having been in this line of work for a decade and a half, I've never really heard a lot of negative news about him. So a little odd. All right. U.S. adds 187,000 jobs in July. In July, the U.S. economy added fewer jobs than anticipated, and revisions to job figures from the past 2 months were downwardly adjusted, suggesting that the Federal Reserve's persistent series of aggressive interest rate hikes may be putting pressure on the labor market. According to data from the Bureau of Labor Statistics, a total of 187,000 new non-farm positions were created during the month. This marked the This marked a slight increase from the revised figure of 185 for June, which had been initially reported as 209,000. Furthermore, the May figure was also revised downward from 306 to 281,000. Economists had predicted that July would see an addition of around 200,000 jobs. While the growth in average hourly earnings remained steady at 0.4% on a month-on-month basis, surpassing the forecast of 0.3%, it was the annual increase in wages that drew attention. Wages grew by 4.4% on a yearly basis, exceeding the projected 4.2% and more than doubling the Federal Reserve's target of 2%. Despite the modest decrease from 3.6 to 3.5% in the unemployment rate, the job market in the United States, as reflected in these figures, remains resilient and strong. The Federal Reserve has been strategically pursuing a cooling of labor demand through its recent series of interest rate hikes. Officials believe that this approach, coupled with a reduction in wage growth, could help manage the elevated levels of inflation. I mean, they could just take all the money out of circulation that they added to the pile back in 2020, but no, that would be you can't grow the government if you're not inflating the dollar. So of course they're never going to do that. The implications of this jobs report are anticipated to influence the Federal Reserve's decision-making regarding future borrowing costs. While the Fed's last meeting in July resulted in a quarter percentage point rate increase, some analysts speculate that this might signal the end of the central bank's year-long tightening campaign. However, the Fed has not ruled out potential future rate hikes if the data warrants such actions, emphasizing that their decisions will be dependent on the evolving economic conditions. Well, I mean, it's just more of the same. Well, we'll let you know when we get there. So again, they created this problem and now they're going to want a pat on the back after the fact and say, look what we did. We saved you. Yeah. Well, over the last 3 years, life has just gotten more expensive. And, while some people have gotten raises, the cost of living has far exceeded it. And, even though, my wife and I live very, very comfortably, it still is more expensive, and it is irritating to pay more for food, gas, electricity, water, everything. So, all right, last up on the docket, it's an article from Mises Wire titled, Do Monopolies Cause Inflation? I know I've been beating this like a dead horse, but inflation is not caused by greedy businesses. It's not caused by too much of, whatever. It's caused by addition to the money supply, which creates inflation everywhere else. So, all right, this is written by Frank Shostak. Let's see here. The yearly growth rate on the Consumer Price Index surged from 5.4% in June 2021 to 9.1% in June of 22, prompting discussions about the role of monopolies in driving such inflation. Economists at the Federal Reserve Bank of Boston have suggested that monopolies might be contributing to higher prices of goods and services. Very nice of the Federal Reserve Bank of Boston to point the blame at someone else other than themselves. Traditionally, economists view monopolies as diminishing market efficiency by exerting control over prices and quantities of products. This perspective stems from the concept of perfect competition, characterized by numerous buyers and sellers, homogeneous goods, perfect information, and no barriers to market entry. In this idealized scenario, buyers and sellers would have no influence over product prices. However, proponents of the competition in products view emphasize that real-world competition arises not solely from the number of market participants, but from the variety of competitive products offered. The greater the product variety, the more intense the competition, ultimately benefiting consumers. Entrepreneurs play a significant role in enhancing competition through innovation and differentiation. When an entrepreneur introduces a new product, they gain a temporary monopoly, encouraging others to compete by offering improved or distinct alternatives. This dynamic is at odds with the perfect competition model, which fails to account for the role of entrepreneurs and innovation. Government intervention to enforce the idealized perfect competition model may lead to unintended consequences. Attempting to standardize products and limit variety could hinder competition and product differentiation. Moreover, concepts of harmful monopolies often arise due to government restrictions or licensing rather than from inherent market dynamics. Yeah, think of the car industry. The government put a lot of car companies out of business early on in like the 40s and 50s because, the big three didn't like the competition. It's like that movie Tucker with Jeff Bridges back from the, I guess it was 80s or 90s. Real good. All right. Contrary to the idea that monopolies cause inflation, increases in the money supply are more a more significant factor driving price inflation. If the money supply rises and more money is spent on products from alleged monopolists, the overall price level may increase. However, without corresponding increases in the money supply, no general price inflation would occur, even with monopolies in the market. In conclusion, attributing price inflation solely to monopolies overlooks the complex interplays of factors in an economy. While monopolies can influence prices, their impact is mediated by various forces, including entrepreneurial innovation and government policy. Ultimately, government attempts to enforce perfect competition through restrictions may undermine the very competition they aim to promote, while monetary policy remains a key driver of overall price inflation. Insane. Boy, wasn't that exciting. All right. Well, that's everything I had for today, guys. If anyone needs anything from me, you need to get your finances under control, plan for retirement. If you want to send your kids to college for some stupid reason, I'd suggest trade school or, something technological. Don't waste the money on advanced high school. It's not worth it. Anyways, you can go to dsafinancialgroup.com. All my contact information is there. Hope you have a wonderful weekend, and I'll talk to you next time. Adios.